Despite rising interest rates or a jump in cryptocurrency prices, a new report from the World Gold Council says gold prices will continue upwards in 2018. To talk more about this, we're joined now by Peter Schiff, CEO of Euro-Pacific Capital and chairman of Schiff Gold. Peter, in the World Gold Council report, Chief Market Strategist John Reed points to increasing global income as a reason we could see gold rise. But where exactly is income rising enough to make that much of an impact?
Well, remember, a lot of the income is a function of more money, right? If people earn more money because central banks create more money, they use their additional incomes to bid up prices for everything. So I think a lot of prices are going to be rising, not just the price of gold. But I do believe as more people perceive the threat of inflation and see the dangers of what the central banks have been doing, I think the price of gold will rise faster than a lot of other prices as people embrace it as a hedge against inflation and as a store of value.
Well, Vince Lanci, the founder of Echo Bay Partners, said that we could see gold prices hit $1,700 per ounce in 2018, which would be a $450 increase from the current price we see now. Do you think he's right?
I don't know. I mean, I don't know how quickly the price of gold is going to rise. He could be right, but it might go a lot higher than that. But it might not quite get that high. I mean, I think it's going higher. I think eventually it's going to take off, right? It's hard to know exactly when that is going to happen, whether it happens in 2018 or 2019 or 2020. But I don't think you have to know in order to profit from it. I think you just have to buy it, because I think that the path of least resistance for gold is up, and it's been creeping higher ever since the Fed first started raising interest rates back in December of 2015. Everybody's been expecting the price of gold to go down, yet it continues to climb a wall of worry. But at some point, you're going to get more buyers coming in off the sidelines, and the price is going to take off. But before that happens, just buy it now.
Well, earlier this year, we saw gold rally after the Fed announced increases in the short-term interest rates, and the Fed has signaled a rate rise of 2% for 2018, 2.5% in 2019, and 3% by 2020. So going into 2018 with that in mind, what kind of price fluctuations should we expect in gold or silver?
Well, regardless of what the Fed is posturing, it's hard to know if they're going to deliver on those rate hikes. But even if they do, it's going to be against the backdrop of rising inflation, where real interest rates are actually declining, even as the Fed is nudging up nominal rates much too slowly. If you look right now at the yield on U.S. Treasuries in euros, hedged back to the euro, it's at an all-time record low. Not too long ago, you could get 250 basis points of yield in Europe buying U.S. Treasuries and hedging your currency risk. Today, if someone in Europe buys a U.S. Treasury, the yield is about negative 60 basis points. So despite these rate hikes, the yield on Treasuries is lower, not higher, and I think that yield is going to go even lower as the dollar continues to fall against not only the euro, but just about every other currency on the planet.
Well, the dollar is down as Congress is pushing hard to get a bill in front of President Trump before the holiday break. So do you think investors eyeing the dollar and gold are starting to maybe worry over the actual impact of the new tax bill?
Well, they should be worried if they're not worrying now, because what this tax bill is going to produce is much larger deficits. Because while there is some relief from taxes, there are some tax cuts here. It's not tax reform, it is tax cuts. But the tax cuts are going to deplete revenue coming into the government as government spending is increasing unchecked. And in fact, I believe they are underestimating the impact on the deficit, because a lot of Americans are going to change their behavior as a result of the changes in the tax law to take advantage of the loopholes that they are opening up. A lot of people who are now employees are going to become independent contractors, and they're actually going to pay 20% lower taxes than what is being assumed when they are judging the impact. And I also think a lot of the states are going to change the way they tax their citizens. I think they are going to lower their income taxes on wages and salaries, and instead have taxes on employers who pay wages and salaries. The impact on the employee is the same, but what it means is that now the employer can deduct those costs on their taxes, and so the government is not going to raise anywhere near the revenue they think from the limitations on the SALT deduction. So you're going to see a huge impact on the deficits, which are going up anyway. So rising budget deficits are very bearish for the dollar because they mean the Fed is going to have to print a lot more money to buy up all the bonds that the Treasury is going to have to sell to replace the tax revenue it lost.
Some have suggested that Bitcoin has been responsible for gold's depressed returns, but others say that it can't be Bitcoin because the two assets have different uses. So what do you think the cause of recent depressed returns on gold are?
Well, I think you got the tail wagging the dog. I think one of the reasons that Bitcoin has been so successful is because gold has done nothing, really. It's been so quiet the last year, and I think a lot of people maybe who might have bought gold have bought Bitcoin, but I don't think that has done much to depress the price of gold, but I think that has done a lot to cause the price of Bitcoin to skyrocket. And I think probably one of the most dangerous things for Bitcoin, if you're involved in that bubble, would be a big increase in the price of gold. Because once the price of gold starts to move, now people want to own real gold. They don't need to own what they believe to be digital gold, but what I believe is nothing more than fool's gold. And so gold going up could really be the pin that pricks the Bitcoin bubble.
Peter Schiff, CEO of Euro Pacific Capital and chairman of Schiff Gold, thanks so much for your time today.